Okay, let's talk about SVB and these bank bailouts for a second. I'm just as surprised to see myself here as you are. I was really trying to bite my tongue about this one because I'm more concerned at this point with speaking out about things that directly impact health and wellness. I started the new podcast, United States of Sick Care. Very, very passionate about that area. But the more the Fed's response to this unfolds, the more I'm like, I gotta give people a heads up on what this is really about. Because there's something deeper here than just government bailouts and should they be bailed out or not? Should more banks be bailed out or not? What kind of precedent is this setting? It's more than that. So when I first saw this story, my very first thought was, here we go. This is part of the agenda to further consolidate and centralize banking and financial power. And again, the powerful will line their pockets on the backs of ordinary people. But let's quickly review what actually happened in the case of SVB, and we'll come back to that thought. So, first things first, SVB is a highly specialized tech industry clique that is wholly unique from other banks in the US. Only 98% of their deposits were actually FDIC insured, and the average account deposit at SVB was hundreds of thousands of dollars. As a reminder, the mean US bank account in the rest of the US, for the rest of us, the mean account balance is a little over $5,000. I'm not saying that I like the idea of anyone, regardless of who they are, which sector they work in, or how much money they have, to lose a portion of their deposits. I think that sucks for everybody, and I certainly sympathize with if you have money in the bank, you should be able to get that money out of the bank regardless of who you are. It's just important to understand when we talk about SVB and why the government chose to bail them out in this specific case and other banks like it. The SVB is not a picture of most banks or depositors in the US. Second thing about this situation, there is already a process in place for situations exactly like the one SVB was in, where the government comes in and dissolves the assets of the bank in order to use that to make the depositors as whole as possible. And the best estimates show that depositors in the case of SVB would have received about 90% of their money through that existing mechanism. What about that other 10%? Well, unlike most other banks, these depositors at SVB have strong ties in the tech world. Remember, they're a tech clique, and they are super backed by highly influential VCs, so venture capitalists. Unlike most of us with money in the bank, we don't have like a few VCs on speed dial that we can call to help us out. But that extra 10% could have been easily backstopped by investors and venture capitalists that they had relationships with. All of those same people, by the way, who were screaming, oh, you got to bail these guys out. They're critical. You got to bail them out. You got to bail them out. They could have easily provided things like bridge loans and helped those companies to make them fully whole, make up that extra 10% that couldn't have been covered by dissolving the bank assets through the existing mechanism that is already in place. No need for bailouts. Again, not a luxury that most American depositors had. No need for that existing process. Our federal government was happy to jump in super quickly and bail them out. It might have taken them months and months for them to so much as visit East Palestine, but for their rich big tech friends, it took a weekend. So before the government bailed them out, and this is the third important point to understand, executives at SVB quietly dumped their shares in the bank. Some dumped 20 something percent, some 30%. So that they can make sure that they cashed out on their investments before their bank went under and their depositors potentially lost all their cash. They made sure to line their pockets first in advance of the bank collapsing and being taken over by the federal government. Additionally, they paid out bonuses to all bank employees 3 hours before the government took over. And I'm not talking like, here's the $500, gift card. I'm talking $20,000 bonuses at the low end. So for low-level employees, and then all the way up from there. So you can imagine how much bonuses executives were being paid out. So money that could have been dissolved in their assets through the existing mechanism that is already in place. Money that could have gone to their depositors to make them whole instead went to fatten their own pockets. Number 4, as the government backstopped all of their uninsured depositor funds, They were sure to let the American people know throughout this process. What did we all hear? This would not be taxpayer funded. This is not taxpayer funded, which is total garbage because money used to backstop those deposits did not exist. The Fed had to inject even more non-existent fake money that did not exist before into our economy in order to backstop these deposits. And anytime new fake money gets injected into our economy, we, the people, ultimately pay for it. So this injection always gets passed along to American taxpayers, for example, in the form of inflation. But also in this case, it will very likely result, I'm telling you to watch for it, coming down the pipeline in higher bank fees passed along to us as consumers. So in order for these banks to be backstopped by the federal government and pay more insurance, do you think the banks are happily going to take that on? No, they're going to pass it along by raising our fee we pay for checkbooks, more annual fees, higher credit fees, more money it costs to open these bank accounts in the first place. At the same time the Fed is injecting this money to provide these bailouts to SVB, they're talking out of the other side of their mouth as well about more interest rate hikes coming to us as consumers, with their explicit goal being to kill jobs. The Fed has been openly clear about its goal to throttle inflation by increasing interest rates until they kill enough jobs to cause a recession and contract the inflation numbers. So what the Fed made clear in these bailouts is it doesn't want to kill these jobs. They were thinking more blue collar workers, middle class, working class Americans, not the banking and tech sector jobs. The federal government has shown their hand and they have told us who they want to suffer. Ordinary working class Americans, not their rich friends in the banking and tech sectors. Treasury Secretary Janet Yellen was asked by a journalist whether this small handful of bailouts that we've seen across the country is setting a new precedent that any bank is too big to fail, and that therefore all cash deposits will ultimately be backstopped by the federal government. And she responded that no, the government would only backstop funds for banks which she herself, along with the FDIC board and the Fed and the president, deemed to be systemically critical to our economy. So let me translate that for you. Sorry, small banks. We're only going to take care of the big guys here at the federal government level. If you're the local, credit union, you're out of luck. So why is this so important? The federal government is blatantly creating incentives for people to take their funds out of smaller banks and deposit them at the big banks. Why wouldn't they, when the federal government is clearly signaling that their money will be safer at the big banks? It will be guaranteed to be backstopped because those banks are, in the federal government's eyes, too big to fail. They are systemically critical. So back to my original thought, that this is part of a deeper agenda to take more financial power from the already less powerful and to give more power to the already more powerful, and in that process further centralize banking and economic power. It isn't just SVB and Signature Bank. We just saw Credit Suisse, a Swiss bank, avoid collapse by the Swiss government having to intervene and having UBS, a very large bank, buy Credit Suisse, while the Swiss taxpayers also funded a portion of the bailout. This is only the beginning. Do you see it yet? Let me know your thoughts. Please like and comment below if you're watching, or you can find me at Instagram and drop me a line there. My Instagram handle is at @the_recovering_liberal. Let me know your thoughts.